okay, James, we're recording. We were happily gassing away, and it's like, okay, let's click record before we miss any of this golden chit chat. So, welcome to the show. It's my revamped the Jake Woodhouse Podcast. Thank you so much for coming on. I will hand it to you, James. Just briefly give us an introduction as to what you're up to at the moment, and we'll cycle back to how you got there.
Thanks, mate. No, it's great to be here, and always love your podcast episodes. So it's it's good to be back on the show. So basically, my background is civil engineering. I used to design tunnels, mines, basements, anything underground. And the cool thing about being underground is you just get whatever Mother Nature gives you, and you don't have much to go off. You've got a couple of boreholes that are 50 mil diameter, so there's a lot of risk, a lot of probability, and a lot of thinking about well, how did the rock get there in the first place? And you got to go back through geological timeframes and all that kind of stuff. So certainly a different field of engineering. I found Bitcoin at the 2017 peak. Bought it, lost a bunch of money, as we all do, and went through that whole learning experience. But in that process, I discovered the world of on-chain data. And that's basically looking at Bitcoin's ledger, pulling out information and using it to understand what's going on. So I became enamored with markets. I became fascinated with Bitcoin. And on-chain data helped me see it and kind of model things, understand what was really going on. It ticked over my engineering brain. I can see the different pieces. I can see people buying and selling and locking profit and selling bottoms and buying tops. And over time, you start to realize that human beings, we behave the same way always. If we're trading gold, if we're trading stocks, if we're trading Bitcoin, whatever it is, Bitcoin just gives us a really quite elegant and beautiful lens to visualize it, to see it. You can see euphoria when lots of new people are coming in and all the old money are just slowly taking chips off the table. You can see those points of maximum pain where everyone who bought the top, that was me in 2017. I can see the candle where I capitulated everything and sold everything at the bottom. You can see these behaviors time and time again. So to me, that was just a fascinating way to bring the engineering component with the data driven and then understanding something that I think is fascinating, which is markets and Bitcoin within that.
We've dug around a fair bit in your history in previous podcast episodes, and people can go and dig those up if they want. I don't want to hang around too much there, but the question just to try and understand, why does an engineer have a base skill set that maps so well onto financial markets? What are the crossover skills?
Yeah, well, I didn't think much of it at the time. In fact, I think I might have chuckled under my breath when my very first engineering lecturer would have been mathematics. He literally said, he goes, 30% are going to be finance, and you're never going to use any of this mathematics, but it's going to weed out the people who don't want to be here, right? That was how he opened. Welcome to Engineering 101. Good luck. And I happened to be one of those folks who did want to be there, and I pressed through, and I loved engineering. It is a great field. They just don't pay you enough, and they work you way too hard. And I didn't realize this at the time, but that's the fiat embedded growth obligation slowly coming out. And over time, it debases your time, right? That's the release valve. Is the graduate works harder and the senior works harder and all those different things. So in a way, I think a lot of engineers go to finance because we think about things slightly differently. We think about everything as a problem, right? And we're problem solvers at the end of the day. And for me, I think my style, and actually, because everyone's got handwriting and whatever your profession is, coding or whatever else, my kind of handwriting style, I love to just finger in the air, get it on the back of an envelope. And something I learned very early on, particularly with ground engineering, where you can never measure anything perfectly. Everything's factors of safety, and you've got to have error bars around everything. There's so much uncertainty, and you can spend an unbelievable amount of time focusing on stuff that really moves the needle 2%. What I found is that I solve problems on the back of an envelope and you're plus or minus 10%. And then you work out if you really have to, if you don't have enough factor of safety or it's a really fine problem, then you can go and massage the final 10%. But most of the time, you can get to 90% and just start building, right? Because you're close enough. You add an extra 10% to whatever it is that you're designing. And if that works, great. You just saved the contractor, you just saved the engineers, you saved the client, sometimes millions of dollars by just not having to care about things that don't matter that much. They may matter, but in structural engineering, they deal in millimeters. In ground engineering, we deal in meters, right? So the nearest meter is just fine.
And so what I like when I hear that, for example, is it's first of all, it's a skill set that I don't have. So, okay, well, James knows a bunch of things that I don't, and that's cool. So I can ask you, and it's quite simple. It's why do you find Bitcoin interesting? And from a I'd like to frame that, but from a very traditional finance perspective, because where this whole podcast project for me is leading, it's like the lens of an investor actually seeps into all areas of your life. And you can use like simple metrics like an ROI. It's like, well, actually, is it worth it? And you got to figure that out. Or equally, something I've been playing around with recently is extremely resistant to calorie counting in like the health department, and doing some like working with a PT, doing some boxing, figuring out like, what are your macros and how do you eat more protein and all this kind of stuff. But I hate calorie counting. And it's quite simple. If you don't measure, you can't manage it. And so I'm doing it all by sight. And I get to the end of a week, I have no idea what I've eaten or I've drunk, and I have no idea what the total calories were, and I have no idea what the macros were, but you're trying to get a result. You're basically steaming ahead with no like understanding as to what the hell's going on around you. And the same applies to investing financial capital, like dollar returns or Bitcoin, as the case might be. So what was it about Bitcoin that caught your attention from that engineering perspective?
The first thing that I noticed, because this is in the 2018 bear market, the first thing I realized is that you kind of get to experience a whole business cycle in 12 months. You go from boom to bust, and like ultra boom to ultra bust in 12 months. And everything was like sped up. So in a way, it was kind of like a masterclass in how markets trade in the shortest possible time frame. I lived an economic boom and bust because the first thing I'd ever bought in my life, I didn't own stocks, I didn't own a single thing, right? I owned my car, and that's about it. And so buying Bitcoin at the top, that was the first time I've ever experienced a price chart ever. And I'm trying,
Wow.
as we all do, you trade your Bitcoin for shitcoins in that process because you don't know what any of this stuff is. And you've suddenly got to think about, well, you look at a shitcoin priced in Bitcoin, it's like, what is this weird fraction thing? Like, how do I price this? And like, as an Australian, everything's just been AUD. I've never had to price in any other currency. So as you go through this process, you're like, oh, wow, okay. So actually everything is relative. Everything is relative. And then you start looking at Bitcoin. It's like, well, Bitcoin's kind of beating gold, even though it's down quite a bit. I'm like, I understood the sound money thesis, and you start to realize, governments have a lot of debt, and you go down that whole path of where does money come from? I think that's a huge part of it. And then I finally satisfied myself and say, Bitcoin really is a solution to this. And not only is it a solution to this, on a relative value trade, it seems to be the best thing to own. And if I kind of bring myself, you've got to go through a lot of work to get to your final thesis. And my final thesis is I just hold Bitcoin and sleep really well. And that's it, because I know it's going to get to the other side. I have done the work to be completely satisfied that it's the asset that I want to hold. It's the primary asset that I want to hold. It does its job for me, which is over the long arc of time, money I don't need today will be worth more tomorrow. My purchasing power increases over time. I don't care about the volatile swings up or down because it's doing its job of, my base case is I need to buy a house. And houses in Australia are impossible to buy on a salary. You're never going to do it. The mathematics doesn't make sense. On a Bitcoin standard, it's not only possible, it's actually so bad that Bitcoin performs so well. You're like, I can't sell this thing. I don't want the house. I'd actually rather just hodl the corn, right? So you then have to compete with this thing. It's like at some point, there's lifestyle chips that you cash in, but you still look at this thing. It's like, if I just do nothing, the purchasing power of myself and my kids is going to be substantially better in the future. So you just kind of sit tight. And I'll tell you what, the number one thing, you sleep well, because I know what I'm doing. I know why I hold it. It doesn't concern me. I wake up tomorrow and Bitcoin's down 40%. I don't really care, right? I've usually already made the decision. If I see that price, I empty the bank account, right? And I just stack the dip.
Awesome. And so there's a phrase that I want to highlight that may not be completely familiar to everyone, which is purchasing power. And when I think about it myself, I'd been an investor for a long time, and I would go to, I'd see investment pitches, or I'd go to a portfolio performance review, and never once is purchasing power mentioned. It's always some kind of pound return or dollar return or whatever the case might be. When you came across that discussion, did that really change the way you looked at things? And certainly from an engineer's perspective, like how you measure stuff, pretty important.
Absolutely.
Was that
I think
crucial? Yeah.
No, it is. And I mentioned before, like the debasement of your own time. you're booked on to do a 37 and a half hour week. That's what your timesheet's supposed to say. You don't work 37 and a half hours. You're working 40, 45, 50, whatever it is. Like your time just keeps increasing. Oh, it's just 2 hours here or there. Oh, no, it's just Saturday morning or whatever it is. You got to get the job done. But you realize that you're only getting paid for 37 and a half hours. If you're working 40, you're actually being paid less per hour. You are shrinking down your income. Now, on top of that, it's much worse in the last 4 years or so. But really, the price of everything just keeps going up. And if you think about it from the perspective of the thing that really clicked for me is that every person has their own inflation rate. What you and I buy is probably going to be different, right? So for me, what is my personal inflation rate? Well, part of it is going to be eggs and bread and milk and your daily groceries. But a very large part of it is, well, what do you actually want to buy? And for me, I want to buy a house. So therefore, what is your inflation rate? Well, my inflation rate is probably something in the order of about 10% a year. So if I'm not growing if I grow my purchasing power, whether by higher income, right? You go to your boss every year and you say, hey, I need a 10% raise. And they can say, well, sorry, the best I can do is 2%, 3%, which is very typical. And I remember having conversations with my engineering leads. And I said, I just finished a really big project. It was well delivered. And we had the conversation, right? It's like, hey, I would like to see if we can review the salary and start pushing it higher. And they basically said to me, look, you've just been promoted. So you're in kind of the lower bound of the grading range that you're in. Within each grading range, we have a band. You can be at the top band or, good performer or bad performer. And they go, the truth is we actually can't pay you more because otherwise it's going to be above the top band of your grade. You're already being paid at the maximum salary that we can do, right? So until you get promoted in the next 3 years and you start to realize, I can't grow my purchasing power. I actually cannot outrun the 10% inflation rate by just begging for a higher salary every year. So then you have to move into the world of investing and saying, well, the money that I do earn post-tax, I've then got to do something with that. Now I can go and spend it and buy shoes or buy lots of eggs, or I can actually invest it in a market and try and grow that into something else. You have to take risks to do so, but you need to find something that returns more than the inflation rate because otherwise you're trading water. You're not actually getting anywhere. I'm not getting closer to a house. I'm just saving in line with it. So every dollar that I earn, whether via investment or salary, the thing I want to buy got as expensive. So I'm flat. I haven't actually made any ground. And that's where purchasing power comes into the mix.
It's fascinating, isn't it? I was taught about inflation, but only in the nature of like inflation's good. And it's something that can be controlled with interest rates and that the central bank, don't worry, they've got your back. And Bitcoin does this amazing thing where it really makes you ask some very, very fundamental questions. Number one, what is money? Okay, well, that's a whole, separate discussion really. We could spend the whole podcast on that. But until you start thinking about the world through purchasing power, it's kind of like what I touched on earlier. It's like you're trying to, reduce fat, but you're not even looking at your calories, mate. You are literally wasting time. And I love that so much because it suddenly, you start to see things so much more clearly. That's a good thing to spend my time on, or not, as the case might be.
Yes. And strangely enough, sorry to cut you off.
No, please, please.
I was having a conversation with my girlfriend the other day, and we were talking about there's like a point in your life when you recognize that your parents are also human, and you can kind of look back on all the decisions and like the life you lived as a kid. You can kind of look at what your parents were doing at the time, put yourself in their shoes and go, oh, makes sense. They're people and they made mistakes here and they did this good. There's a point in the journey of investing where you realize that the central bank that you've always just looked at as like, oh, inflation's just a thing, or, central banks, they just manage whatever. Suddenly you realize, hang on a second. No, they're actually people who are making decisions, and those decisions actually may not be a good idea, or they may be a great idea. And you start to actually look critically at not only the systems around us, but the people who are operating them. And then you look at all the incentive structures and how they come to those decisions. So there's almost like, and a lot of people don't do this. I'm sure a lot of people go through that process of like recognizing their parents, but they probably don't think about almost the state in a similar way where you're like, why are these decisions being made? They kind of are controllable. And we as a society, it's a much bigger problem because how did these systems come to be? And most people have no control over any of it, or they certainly feel like they don't. So they don't really look into it. But eventually you realize these are all a product of decisions that take decades to form, right? And then therefore takes decades to change as well.
It's a big day, actually, when I came across this statement. And I think this was a Saifedean Ammous podcast I was listening to. And of course, the Bitcoin Standard is a very formative part of the journey as well. So shout out to an incredible guy. Bitcoin is disrupting central banking. Like, that was the statement. And I've been working in startup land, and the word disruption was very familiar. I was like, oh yeah, you're looking for high return opportunities where software is going to disrupt traditional business models, where either it's like a disintermediation of like a broking type layer, or you're looking at like automating the back end of a legal company, or who knows, right? And you could either be the founder of that business, or you could put money in as startup investors. And it's all very exciting, but I'd never once stopped, slowed down, and thought, oh, hang on, what about the money? Could we disrupt the money? And that was a really big day, because it's like, oh. And it's almost like 3 tiers of kind of shock. You're like, oh, maybe we could. What does this mean? Okay, well, what is
Yes.
the central bank? And I mean, wow, like a whole nother rabbit hole comes out there. What I'd love to ask you about, James, actually something that's coming up for me a lot at the moment in my general investing research, is that we've covered quite well some of the fundamentals is why Bitcoin's important to catch your attention and start investigating it. But how important for you is global liquidity from a perspective of central banking and the way that they inflate their balance sheets and the price of assets generally? And is Bitcoin just a supply and demand game where it's like there's just fewer people that want to sell than that want to buy, and the price is going up? And what are you seeing in your charts in relation to potential monetary easing policies that we see?
Yeah, I think Bitcoin is often described as the last functioning fire alarm. And the concept there is that money is always growing and contracting, right? And there's all sorts of things that do this. Let's go back to that concept that the world is a relative game. So there was a chart that was shared a little while back. People look at how much money is in the world, right? Global liquidity. There's various other ways people measure it. But basically, it was declining quite sharply, I think through December or thereabouts. And the decline of it was interesting because the longer you spend time within markets, you start to recognize patterns and shapes. And I was like, oh, look, the decline of that global liquidity actually just looks like the inverse of the US dollar getting stronger. And when you think about it, if you're trying to take all the money supply in China and Japan and the US and the Eurozone, if you put all these together, how do you normalize them? Well, you have to price them in US dollars, right? That's the base case. So if the US dollar gets stronger, then the total amount of money in USD terms in China goes down, right? It's worth less in US dollars. So that's one example of something that affects how much money is out there. And if everyone's borrowed US dollars, which many countries and companies have, if the US dollar gets stronger, it's like if you borrowed in gold and suddenly gold gets more expensive, you have to pay back the gold. So your debt becomes harder to service. Same thing with the US dollar. And you start to recognize there's actually about 3 or 4 prices in the world that really matter. There's a lot of prices, but talking about that engineering analogy of like, what do I put on the back of my envelope? What is the strength of the US dollar? Because that's what everyone borrows in. What is the price of oil? Because that's what keeps the economies lubricated. As an extension of that, you could say just commodities in general, but oil is really the centerpiece of it. And then there's treasuries, bonds, because bonds are the base level of the financial system. And if bonds start to sell off and fewer people want to hold them, interest rates go up. When interest rates go up, everyone's mortgage goes up. When everyone's mortgage goes up, people have less money. So that drains liquidity. And these work obviously in both directions. So you start to realize that the world is a relative game. There's a handful of really big assets, the dollar, oil, bonds, gold, and Bitcoin fire alarms. They tell us information about how that liquidity is changing. The world is a complex system. Markets are complex systems. And I have given up. And I'm very open about, I can't predict any of this stuff. No one can. Nobody knows where this goes. We can certainly look at all data sets to try and get a bit of a feel for where we're most likely to go and as trends start to shift and change. But in my view, Bitcoin and gold in particular, those two, they're really the assets that people go to when they're like, something ain't right. Something ain't right. I don't buy Bitcoin because everything's hunky-dory. I buy Bitcoin because I can't live if I just continue to work an engineering salary, I will go broke. I will never buy a home. My purchasing power will continue to go down. My wages will never keep pace with inflation. I will be further and further down on the treadmill. I don't buy Bitcoin because everything's going great. I go buy Bitcoin because everything's not really that great. Now, I say that from the perspective, being very aware that there's about 8 billion people in the world who would rather be in my shoes, right here in Australia, you and I. So that's coming from a very relative perspective. There's a hell of a lot of people who are far worse off. And if we're still feeling it as well, and I'd say most people listening to this podcast, you probably understand exactly what I'm talking about, then we have a problem, right? And that's really why Bitcoin and gold, they're important, because they give people something to just hang on to. It will get through the storm. It will get through to the other side. You will have that ounce of gold, and you will have that UTXO on the other side of whatever comes. The price of it may change and fluctuate, but you're going to have the asset. It's not going to be taken away from you. I think that's why you sleep well at night.
Yeah, it's cool, isn't it? The idea of sleeping well. It totally resonates. Another big lesson was the day I realized, hang on, what's the probability of Bitcoin actually dying, like completely disappearing, going to zero, like, annihilated? And I came to firm conclusion that that was basically impossible. And never say never, right? Of course, we don't know, to your point. But in any other investment, I'd never come across that before. Because you might buy, Qantas, an airline heavily backed by the Australian government. What can go wrong? Well, it could be completely bankrupt, and it might not get a bailout, and therefore it could disappear. Or equally, a government bond. Well, as you've seen from the history of money, right? There's been hundreds and hundreds of different currencies, and basically all of them always die. So at some point it will happen. And that's what really was so fascinating about this idea of, like, okay, well, over 100-year timeline, what's actually still around? And you mentioned the word risk. It's like, okay, well, actually, Bitcoin starts to make a lot of sense the closer you get to it. Because even if you buy and you get hammered in a horrible bear market, is it going to zero? Well, the answer is no. And that to me is very exciting, because it just frees up all this capacity to be like, okay, this is what I'm going to do. I'm just going to buy this stuff, and then I can do other things. To mirror on your life, James, does that happen for you? I mean, you've started a business and changed careers somewhat over that time. So yeah, I guess it's begun to impact your life in a very real way as well.
Oh, massively, no question. So over the long arc of time, I've sold Bitcoin here and there, but only in my early days trying to trade shitcoins, and as you're learning the ropes.
Very important.
Very important.
You don't understand what you're doing, and
until you
take action,
loss,
exactly,
you have to take an L. You've got to take a really fat L. Once you've taken that L, then you can go, now
your biggest loss, you'll never forget.
No, now I know. And yet usually you take one and then you take another one later on, and it reminds you, right? But you need to take an L, because then you can recognize what not to do. And in markets, if you come in at a bull market, you don't understand what a bear market is. You'll find out eventually, but you don't understand when you come in. And that starts to change your behavior patterns, right? So you can start to think about, okay, what hurt? What hurt about that process? Well, usually it's because you buy too many coins at a high price and then it goes down. So you start to look for, what does a high price look like? Because your decision framework, it's all about getting your framework right. My decision framework is simply, when it's overheated, it may not be my price to sell, but I'm not going to buy either. I'm just going to let the market find its level, right? So you got to go through that kind of journey of taking that L. I think I've diverged from the question. Remind me what it was.
Well, I'll cycle back to it in a bit, because I want to talk about your experience starting a Substack and how it's really changed your life and those decisions. But We'll get to that. You're starting to touch on this idea of like, when's a good time to buy, when's a good time to sell, what am I actually owning here? So yeah, continue on that route, because there's two crucial questions as investors. What are you going to buy? And then when are you going to buy it? And that also eventually becomes when you're going to sell. But the data-driven approach that someone like yourself takes is something that I can take huge insight from. So yes, like you were thinking, like I hit this bear market and what was happening. And so how did that evolve into what you do today?
Yeah, so it's funny. In the world of on-chain data, you can basically see every coin in the whole Bitcoin network, when did it last move? And what's interesting about that is you can say, well, okay, let's say that there was a coin that last moved in 2018 and they still hold it. I can measure their cost basis. So I know when they acquired it, at what price. And if we're currently, let's say they bought it $10,000, if we're trading at $100,000, that dude's holding a $90,000 profit. If he spends it, I now know that somebody who was around in 2018 and has been through a very similar journey to myself is now taking chips off the table. Congratulations, well done. Now, if one guy does that, it's a data blip. If a whole pool of people start doing it all at the same time for weeks at a time as the market's rallying, what's really interesting is if you show a bunch of charts that I use to the uninitiated, people who are brand new to markets, have never seen a financial chart in their life, they would say, oh, look, price goes up when this thing goes up. That must mean that when this thing goes up, it's good. It's like, no, that thing going up is people selling and taking huge profit. Now, the market can keep going through that, but eventually that is quite literally the mechanic. That is the thing that puts tops in. Now, I did a talk in Nashville for the Bitcoin conference. And it was very interesting, actually, because my talk was on, there's a few different elements, but my talk was on the same time as Michael Saylor. So I think I had like 6 people or 9 people in the room, and one of them was my co-founder. So anyway, what was really interesting about that, and I actually opened by saying this is like my Andreas Antonopoulos moment, right? Speaking to an empty room of chairs. However, everyone's in the room with Michael Saylor, who's going to tell them what he always tells them. Bitcoin's going to 13 million over this course of the next 55 years. And if you just huddle on, you'll be, glorified and turned into an angel. Whereas what my talk was about was a lot more practical, saying back in 2018, when I'm being forged in the fires of a bear, I got no idea what I'm doing. And I look at the chart and I go, this is actually when I bought my first Bitcoin. And then I overlay one of my metrics with no axes, no nothing. It's literally just the red and the green showing when it's up or down. And what I showed is that when I was buying my first Bitcoin, the smartest guys in the world were taking the fattest profit. I was buying off them, right? Unaware of that this was happening. We got our first sell-off and then it rips. And I was like, oh, cool. This is the dip that I was looking to buy. I should actually buy here because it's going to go to a new all-time high. That was the relief rally where not the smartest guys, but the second smartest guys were taking the second fattest profits. And then what happened is the market keeps going down. And eventually I go, oh man, we're at like 6K. I'm like, I know what I'll do. I'll sell here and I'll buy it back lower. And then I look at my metric again. And that's when all the guys like me were also taking the loss. They've bought at 20, they've bought at 16. They're now selling at 6, thinking it's going to 2, and it goes back to 14. And you're like, what am I doing? And then I keep going further along, and you go on the internet, you look at YouTube, and you discover a new indicator. You're like, yeah, cool. Now I'm a master trader. I got my new indicator. It tells me to buy. No, sell. And for whatever reason, there's 2 areas where I've discovered this, and I know this is like widely talked about: business and markets. Those 2 things, almost always your default human, the thing that you would assume you should do is almost perfectly incorrect. So they're the 2 fields that I've discovered that you have to just question everything and almost do the perfect inverse, or at the very least challenge the idea of this is what I wanted to do. What would happen if I did the opposite thing? And they're the 2 realms where you really have to do that. So anyway, after all this journey, I can now look back and see all of my decisions and how I created those on-chain prints of buying and selling and doing dumb stuff. I can now see that and now apply it to today, because I know there's always going to be dumb guys. There's always going to be smart guys. Someone's going to buy the bottom and sell the top. I care about what they're doing. Someone's going to buy high and sell bottom. I also want to see that because I want to be the contrarian. I want to be the opposite. I want to be the metric and do the opposite of what the dumb me was doing way back in 2018.
And so another thing to highlight here, I think so fascinating, is the idea that on-chain data is in itself a nascent market. It's never really existed before in the way it does today. So can you explain to someone why that's the case and some of the coolest kind of aspects to that?
Yeah, it really is fascinating. You're absolutely right. It's very nascent. I would say there's probably, like, in terms of people who are competent at using it, you'd be lucky if there's 100 people in the world who actually know what's going on here. It's a very, very small.
And that's why your newsletter is so brilliant. So anyone listening, I highly encourage them to go out and buy a subscription.
Yeah, and look, the thing is that it's not like the on-chain data is interesting, but as with all things, you can be a good analyst, and you can be a not so good analyst, right? Now, obviously, I try to be the best analyst that I can, but when you look at these things, what makes on-chain data for Bitcoin so interesting and so special? Because there is on-chain data for every network. Now, when I say on-chain data, just to be crystal clear, because we're looking at blockchains and you can see sequentially who owned what and when, it's basically like a snapshot every single day of who owns what, how long they've held it, what price they paid for it, and that changes every single block. So what we do is we aggregate all this information, and we use various things like cohorts. Show me people who bought recently versus people who bought a long time ago. Show me if they're locking in profit or taking losses. Show me if they're hodling their coins or if they're spending them. We can basically aggregate and look at how people are positioning, what they're doing. Are they moving coins in and out of exchanges, so on and so forth. Now, for all the other chains, there is on-chain data, but the problem is that there's a lot of noise. Oh, that was a token sale, or that was some team's vesting, or that was a VC raise, or there's all this other stuff. Is that really profit if they're just putting it in and out of this, whatever it is? Like, there's all sorts of complexity. Whereas in the world of Bitcoin, its only job is to move Bitcoin from A to B. And 80% on any particular day of Bitcoin moving is going in and out of exchanges for buying and selling. That's basically what people use it for. It's also the most hated, loved, feared, and revered asset ever. There's never been anything like it. Maybe gold, but I think Bitcoin's surpassed gold in that some people absolutely despise it and some people love it and would do anything to save it, right? So you've got this really interesting dynamic where it's such an emotional thing. And so is profit and loss. The high volatility also makes people extremely zealous about it. Their entire net worth is tied up in this thing. So they make decisions that are very human. So I'm positive that all of this data and these behavior patterns, the psychology, it's a constant. It applies to every asset. This happens in Tesla. It happens in gold. It happens in everything. But we can see it. That's what's so interesting about Bitcoin. We can see it. And not only we can see it, it's not hidden behind the NASDAQ data feed. It's not hidden behind, New York Stock Exchange or some bespoke trading hedge fund. It's the blockchain, and everybody who downloads the network can get access to it. And that's what makes it so interesting. It's like you can't stop this data. It just is. And really, it all comes down to how do you use that information to make better decisions? Because you can. Not many people do, but you absolutely can.
And it strikes me as the idea of you're measuring emotion with something completely unemotional. And it's perhaps the first time it's ever been possible, expressed through price and value as a language. So the idea that you can measure human behavior in exchange for, if you look at historical data of a stock index or something, but Bitcoin doesn't change. It hasn't changed since it was first created, essentially. So it is unemotional. Literally, it's just facts the whole time. Or they call it the ultimate truth is the Bitcoin blockchain. Like boom, boom, boom. It just does the same thing.
It's the only thing you actually know is true. Like
correct.
If you honestly break it down, because nobody can alter it, it is actually the only thing that you can reliably say did happen. Because what else could you possibly say did happen? I know that block was mined, and I know that transaction was finalized. You can't actually say that about anything else. Anything else could have been changed, could have been tweaked, could have been a lie, could have been an incentive. Bitcoin, you can't lie. It just is.
It's the truth laid against the fixed set of rules. Oh, look, this is token whatever on a crypto blockchain. It's like, well, hang on, how many tokens have they got? Oh, well, we don't know how many they're going to print. Okay, well, what are you measuring? The behavior you witness on Bitcoin is a better representation of it because of the fact it's on this kind of base layer of truth. The work you're doing is an extraordinary exploration into human psychology. And that's a real, you didn't expect to get there, right?
Absolutely not.
You're like, my salary doesn't work. I cannot buy a house. And suddenly it's like, I'll tell you what about human psyche.
Yeah. Let me start studying how human beings trade this strange internet money and, come up with all sorts of weird insights. But they say that past performance can't predict future results, right? You hear this all the time in finance. And, that's obviously true. But what you can predict is how human beings respond to fear and greed. So if we look at previous cycles, because we can see where everyone's cost basis is, let's say we go to the bottom of bear markets, the darkest time, market's been going down only, we're down 80%. Who's left? Who's actually truly left holding this thing and still buying after an 80% drawdown? Very, very high conviction people who've done the work. And we can see when the unrealized loss, just the pool of coins that have been bought at a higher price, you can see how much damage is still held. And there's this threshold of how much damage needs to happen before every speculator is gone. There's no one left. There's no sellers left. So you can actually visually see when you get to that exhaustion point. You can also see when you get the smallest amount of those old money, people who are buying in that bear market. I look and see when there's not that many of them left. And at that point in time, it's telling you, well, why aren't those guys still here? Why aren't they still holding? Because if they thought it was going higher, they probably wouldn't have sold it. But because they have sold it, it tells you a story about their conviction. They're like, you know what? It's a little bit expensive for me at the moment. Probably not going to buy as much at the moment. So suddenly you've gone from having no sellers to actually having all the guys who did buy at the bottom, they are now distributing at the top. And, who are they selling to? People who don't have that conviction, who don't have that experience. You've probably heard about Bitcoin for the first time, or they're finally feeling so much FOMO that they've got to get in. They're the least likely people to be able to weather some kind of a serious drawdown. So you can start to see these thresholds of when human beings panic, when do they make decisions, how much pain can they handle? And then if that pain is too much, you pay attention for when the market starts to get up and against that threshold, and you kind of pre-make your decision. If we get here, I'm hands off. I'm going to walk away and just let this thing do its thing, because we start getting into risky territory. See, it's all about human behavior.
So, James, for the next 6 to 8 months, I'm going to be looking for some cheeky data points. James is looking at this, or James is looking at that. At what point does this start to look like a position I might sell some? And I'm not someone who's going to sit here and never sell your Bitcoin. Obviously, ideally, never sell your Bitcoin. But what if you want something in your life that you make your life materially better? Well, sell some Bitcoin.
That is worth more than money. Yeah, absolutely.
Right. So what are some of the metrics that you're following that you would be willing to share today that are really spicy over kind of 6 to 8 months? I remember so well one of your presentations, the first time I saw you speak publicly, talking about reading the tea leaves. You could just see, as you've described, these waves of emotion. I saw a stat just this week showing how retail's just not even Googling the name Bitcoin at the moment. So we're not even close, right, to anything kind of euphoric. Yeah, so I'd love to know, what are some of the things that we keep an eye on over the next 6 to 8 months?
Yeah, so we're in a slightly different world. And I think it's really important, in my view, to just recognize that the four most dangerous words in finance is this time is different. This time is kind of a little bit different, right? So there's a few different elements. One, I think it's undeniable that Bitcoin has now crossed the Rubicon, where it is now a part of the world of finance. It is now accepted. And I see this, I'm actually amazed. This is the thing that amazes me the most. We're now seeing critics of Bitcoin from years ago saying there's Bitcoin and then there's crypto. They're actually making the separation, the distinction. This is new. This is not a recent thing. This is a new thing where people are actually, broadly speaking, recognizing that there is Bitcoin and crypto, two different things. And actually, on the post that I was preparing just before I jumped on this call, one of the charts that I show is the Bitcoin market cap change. So we had a pretty volatile day as Trump's getting inaugurated and swings up 10%, down 10%. In that process, Bitcoin added $160 billion and then wiped it out again, right, in market cap. $160 billion is a top 100 company in the world. And I did this in one day, right? It's 40% of Ethereum's market cap, which is the number 2 coin. When you realize that Bitcoin in a single random, no information wick can move 40% of your second biggest asset, the second biggest asset doesn't matter. Bitcoin is so much bigger than everything else. The bid that is under this market is also very different. We have gone from FTX bottom, which is 15,600.
Yeah, just under
to
16, wasn't it?
109,000. And we have had a 26% drawdown is typical, right? Normally we're having 30, 40, 50, 60, sometimes 70% drawdowns in this process. We've barely had a 25%, 26%. We had one wick that went to 32% and it lasted 3 hours in August. So there just hasn't been any downside. It's just been this up, sideways, up, sideways, up, sideways, which is a very, very stable market structure. The ETFs have taken in 50 billion. I think IBIT alone has taken in 50 billion in terms of AUM. The ETFs as a construct are now bigger than the gold ETFs. So you just look at all these data points, you're like, this thing, it has
demand is just massive, isn't it? Yeah.
Demand is off the chart. So the way that I think about this, right, and look, there's a lot of, I won't go into all the details, but I find it very hard to believe that we're going to go back down below about 60, 70K. I find this hard to believe. The reason why I call out that area, let's just say 60,000 for even numbers, That's approximately where Bitcoin is a $1 trillion asset. I think it's actually 1.2. So somewhere between 55 and 60 is $1 to $1.2 trillion market cap. Now, in 2021, we tried to do this twice. First in Q1 in like April, we tried to get above 1.2 and we got rejected with a 50% sell-off. We then tried again and we did it. We got up there, we got to 70,000 and then we had a 80% bear market, right? We tried twice. We then waited all the way through 2023. The ETFs go live. We rally up in March. We spent 7 months trading sideways, and every time we got down to 1.2 trillion, right back up again. Sold off, right back up again. The market simply would not let it be worth less than $1 trillion. Bitcoin is now a $1 trillion asset, and we teleported immediately to 2, right? And we went above silver. Silver didn't put up any fight whatsoever. We flipped silver and just stayed there. It just didn't go down. So I've been writing about this. The market simply won't go down. Now, that doesn't mean it won't go down. It will eventually go down, right? So don't mince my words. It will eventually go down. However, we have to also recognize that if we're at 100K and we typically get an 80% correction, we're not going back to 20K. That's just not happening. So suddenly you're like, okay, either Bitcoin has to go higher or we're not having 80% drawdowns anymore. Maybe 30, 40, 50% is normal now, right? So you start thinking about in these concepts, and I have this saying, the bull market will author the bear that follows. If you wake up tomorrow and Bitcoin's gone from 100,000 to $1 million, yeah, now you got your 80% drawdown, right? Incoming. If on the other hand, we grind up and let's just say we go to 120 or 130, and then we chop around sideways for 6, 7, 8, 9 months, and then we go again. We're building support that whole way up. People are getting used to, $100,000. I don't like that Bitcoin's $100,000 because I can't buy as much anymore. But I also kind of understand it. I'm not willing to wait. I'm not sitting on my hands and going, nah, I'm not buying Bitcoin until it goes back to 20K. That's gone. Those days are gone. So you eventually realize that like we're in a new altitude now. You got to get used to it, right? Start doing your breathing exercises. Get used to the fact that we're no longer a $1 trillion asset. We're a $2 trillion asset. And we'll go up to 3, 4, 5. We'll pull back to 2. All these things will happen. But the probability that we're going to go down to $20,000 again, it's just so infinitesimally small. I just don't think it happens. So therefore, you just have to acclimatize yourself to where we are in this new kind of regime.
Even if it did, the time it would spend down there would be so short that it'd be like catching a knife edge.
It'll be an
Talk
event.
about a trading event. No one's sitting on their phone all day watching the price. Like that's how plugged in you'd have to be. And by the time you like move some dollars onto an exchange, just forget it. The moment has been and gone for sure.
Absolutely.
It's so interesting, isn't it? Wow. And so I don't like price and time predictions, but is there anything that you're putting out there in the universe you think's in the realm of possibility over the next 12 months?
Oh, absolutely. Yeah, no. So the way that I look at it, again, let's bring it back to basics. What puts the top in? A top in. And when we say top, a lot of people get caught on like they think there's going to be these big cycles, and there might be, right? We might get these cycles, but the correct way to think about this is which top matters for you as an individual. Same reason that your inflation rate is what matters. What top do you care about? And the answer is going to be very different if you're a retiree. If you're a retiree who's been buying Bitcoin for 6 years, 7 years, the next top, based on where I look at things, if we get to 120, 150K, I think that's going to take some time to get through. I don't think we just teleport through and suddenly we're at 500,000. I think 120 is where I look at a lot of models, and basically I'm looking at when do people start to sell and what incentivizes people to sell. There's 2 things. They're either in a really big loss and they want to just capitulate and get out, or in a bull market, they're looking at a big green number and going, man, that's life-changing. I could pay off my mortgage with that. When a lot of people go, hey, I can pay off my mortgage with that, suddenly you get a lot of sellers. Sellers are what creates tops. Local, global, all sorts of things. So understanding what top matters for you is important. For me, even if it got to 150,000 US, that's not my price. My price is higher than that because I'm early 30s. I can wait. I'm not fussed. I have no issue with kind of income. I'm not fussed about just letting Bitcoin do its thing. If we go to 500,000, it's like, yeah, of course I'll take some chips off the table, but 150 isn't it? So anyway, I look at a lot of models and say, well, I can see everyone's cost basis. If I can see everyone's cost basis, at what level did everyone sell last time and the time before and the time before that? oh, look, they all seem to sell at the same level, right? When their green number in their portfolio is very big. So therefore, what price would we have to go to based on the current cost basis for this group or that group or this group? If I look at all these different groups, people have been around for a long time, people who just bought the whole market on average. If I look at all these different groups, I can start to say, well, what price do we need to go to today in order for all of those people to hit that threshold where they're like, wow, I can pay off my mortgage. Therefore, I can kind of project and say, well, here's probably the zone of interest. So the bottom of that zone of interest, that's called like a topping cloud. It's like a cloud of areas where I don't know where the top's going to be. But this is where people are going to start making decisions to cash out, historically speaking. 120 is the bottom of that as we stand today. We're at 102 today. 150 is kind of getting into the top realm. You're above 9 out of all 10. So once we get to 150, that doesn't mean that that's going to be the top. It's going to be probably a top. We'll probably get some serious resistance. We probably won't just zip through it and that's the end of it. And if we do, we'll probably come back down into it, right? The market's got to find where it wants to go. And look, maybe it just keeps going. But based on historical precedent, I'd be very surprised if we go from 150 to 200 in the matter of a week. I would say that 150 is probably where we get to in and around the next 6 months, 8 months. And I think it will take several months, maybe a year, to prove that we actually have to go higher. Maybe we have to go lower before we go higher. But that's my just general ballpark, because that's where people have sold in the past. And my assumption is that if human beings are very, very similar and we have the same emotional drivers, a lot of people will do the same thing.
I also really like the idea of buying on the way down. I.e., it's like, okay, I think we've hit the top, and it could have been 2 weeks ago. But the point is like you're getting a liquidity moment that's not far off. The best, most sophisticated traders in the world, they will all admit that they cannot get it perfect. No one can. It's pure luck. You're like, oh, that was actually the top that I got.
Totally.
Okay, sweet. Because, let's say it's all the way back down at 15,800. I remember people like, it's going to $5,000. I mean,
yes.
No one has a clue what's going on. I'd love to ask, as a fellow content creator, your experience starting your newsletter. So again, anyone listening, I highly encourage you to go out and subscribe and be a paying subscriber to James's insights, because I've learned a lot myself, and in particular this idea of like breaking down the charts and looking, okay, well, this is what this group of people are doing, this is what this group of people are doing, and it's just helpful to say, okay, well, that kind of makes sense in terms of why the price has gone where it's gone. And so I'm probably a typical subscriber of yours, and I'm long Bitcoin, and I'm just like, what the hell's going on right now? What's it been like? You mentioned you have a co-founder, and the experience of creating your own income now not being a problem. I'd love to learn some more.
Yeah, absolutely. So, the CheckOnChain project, something that it actually was born many, many years ago. So, back when I was still an engineer, on-chain data started to come out, and I used to download this CSV. And every day I download a new CSV and replace it in my big engineering spreadsheet. Right? I've got all my charts, and eventually I was like, it's really cumbersome. I've got to update each chart, and then links break, and oh no, that data point's not updating. It was just painful. And at this time, a lot of people in engineering were starting to learn Python, right? And using Python code to just automate certain things. So I was like, you know what? I'm going to use this on-chain data thing. This is going to be my project. I'm going to teach myself Python, start building charts, and automate this whole thing. So then I can just literally download the CSV and then run a piece of code, and I print all these charts. So anyway, that was the original project. And that would have started back in 2018 or 19, I think. 2021, I joined the Glassnode team and kind of got to learn. I built their analyst team and kind of got to learn what these metrics all did. Spent a lot of time thinking about how to talk about and presenting and explaining to people how they work, and going through that journey myself as well. You mentioned my co-founder. So Alec, he's my best mate. We've known each other since we're like 3 years old. So he and I both worked at Glassnode, and we learned a lot about product, about how software as a service works, about data and data businesses, and what clients do and don't want, in the marketing realm, what do people like to absorb, and all those different things. And eventually you reach a point where you really want to do something, you want to challenge yourself. And I kind of got to a personal point where I felt like I'd kind of solved that problem. I'd kind of done the Glassnode journey, and I'd also finished working for somebody else. I always wanted to start my own business, because you all reach a point where it's like, I just want to do this myself. I want the challenge, the personal growth story of actually starting your own business, running your own company, just starting from scratch. And that's a scary process, right? So we went through several months of saving up and eventually launched ourselves in and said, all right, let's do this. Let's commit. We decided to use Substack, and essentially we put out 2 insights a week. And the way that I like to think about things, I can't predict the future, but I can prepare for it. So even if I go through an exercise, let's say we're in a correction, and I think I released a piece recently where we're chopping around about 90K, and I said, look, there's a possibility, and here's my reasoning for why. There's a possibility we may get down into the 80,000s. I'm going to think about what my decision will be before that happens. I've got that in my tool belt. If we go up, great. I didn't need it. I didn't need to pull out the tool. But if we go down, now I can say, right, here we are. Here's one I prepared earlier. I know exactly what I'm going to do. I have thought through that process before it happens. Likewise, I don't know what price we're going to get to, but I know if we get to 150, I'm probably not a buyer straight away. I want to see how the market shakes out. So the whole purpose of the CheckOnChain project is to help people understand why markets trade the way they do, help them visualize it and actually see it. And my thesis was there's hodlers out there. They've all gone through a similar journey to me. They thought they were a trader. They realize they're not a trader. They realize they're a hodler, but they still wonder why the market does what it does. Why does it trade this way? I see all these people talking about derivatives or ETFs, and what I try and do is say, yes, here's what I think is real. Here's what I don't think is real. Here's my evidence as to why I think that narrative you can probably put aside, and that narrative is a bit hyperbolic, right? I want to ground people and just give hodlers a advanced kind of snapshot of how the market really trades. What's going on under the hood? Let's have a look as an engineer, look at all the different pieces of the puzzle, try and formulate a thesis. And the general concept here is that when you understand why, the hodling is so much easier because you understand why it's volatile, or you're prepared. You've already thought about, I'm pretty sure that the next month is going to be choppy and we might go down. And then we go down, you're like, oh, cool. That was expected behavior. Look, it actually did go down. That's kind of cool. Rather than, holy shit, why is it going down? I don't know what to do. So we try to solve that uncertainty question, right? And, as a bit of a litmus test, we're at 100,000. Imagine you wake up tomorrow and we're at 80,000, or you wake up tomorrow and we're at 120. Your response will probably be very similar. What just happened? I try to answer that on both sides of the equation before it happens, as well as put probabilities to it and say, well, this is what I think is likely. Oh, look, I was wrong here. It actually seems to be trending in that other direction. So it's not about making calls. So many people think it's about making calls. It's not about making calls. It's about preparing for any circumstance so that when it happens, you've already reasoned about it. You're not surprised. And being surprised in markets is the biggest killer because you just don't know. And then you make decisions that you regret.
That's brilliant, James. It adds a layer of sophistication to this hodling journey, for want of any other word. And the bigger the bigger Bitcoin becomes as your net wealth percentage, the more important it is you understand what the fuck's going on.
Absolutely.
Because it's like, why has it just dropped 20%? You're 20% less wealthy because, one's Bitcoin stacks got bigger and bigger as a proportion of the net wealth that they might own, or at least in my case, that's true. And so having good insight into why things are happening, absolutely, that's why I'm a happy customer. I have one last question, James, before we wrap it up. So where's that project going then, CheckOnChain? Do you see the retail market being your favorite customers, or is there anything else popping up where you've got institutional investors that want the kind of information you're selling?
Yeah, there's a few elements to it. So we did a survey a little while back, and we'll be doing another one soon because we love feedback. We like to understand where people are at. Do they watch the videos? Do they read? Do they do both? One of the questions that we asked, because our thesis was there's a bunch of hodlers out there. Everyone who's a trader and just like a degenerate speculator, they want a different style of content to what I prepare. The people who want to stick around and learn and think through and like contemplate things slightly differently, they're the people who are around. So we did a survey, and I know, having spoken to many of our clients on phone calls and various other things, I know that there's institutional guys. I know that there's hedge fund guys. I know that there's retirees, and there's people all over the place, people like us. And then the survey came back, and it was 96% self-identify as a hodler. They don't identify as a professional investor. They don't identify as a trader. 96-point-something%.
And so your hunch was completely right.
Yeah. Even if you're a hedge fund manager, who am I speaking to? The hodler. And I actually use this in my writing. There's check the analyst, Check the analyst's job is to be very objective. Here's what I think is going on. Here's my framework, right? Here's the numbers and the number crunching. And then there's check the hodler. And check the hodler is us. And that's me because I'm still a Bitcoiner. Yes, I'm an analyst. And yes, my job is to be objective and as sound and rational and sober as I can. But sometimes check the hodler just wants to buy Bitcoin. So check the analyst's job is to be like, look, if you're going to buy Bitcoin,
now's a good time.
Now's not the worst time. And there's actually a big
to your point, like
there.
we're probably not at the top, but we might well be on the way down. So not a bad time to jump in. For
correct. And that's the thing. It's like, will I regret this in 2 weeks' time? Check the analyst will go, there's a lot of risk here. Will you regret this in 6 to 12 to 18 to 2 years? No, not at all.
Check the hodler's
right?
like, bye.
Exactly. So check the hodler just goes, well, okay. Check
or
the analyst.
I'm not fucking selling.
Yeah, exactly. So that's the whole idea, right? Trying to just marry up those two sides. So to answer your question, we do have institutional clients. We do have an institutional product as well. And the idea is that it's basically just a bit more personal. We do a monthly slide deck, and I really try and look ahead and just steal insights. And then we do a monthly call as well. So that's obviously a bit more of my personal time. So it's slightly higher price, not too much, but slightly higher price for that. We do have those different plans, and we have a free charting website. So literally every chart that you've seen me use, it's all available for free. We are doing a revamp of that. So that'll be a product to its own soon enough. But mate, look, it's one of those things that I realize I don't need to go and target everyone in the world. I like analyzing Bitcoin. I like thinking through these problems. So my general purpose is to just give other people an opportunity to just like see how I think about stuff, get feedback about it. It helps people, right? So that to me, that's what it's all about.
And I think, James, the key there is that you love analyzing Bitcoin.
Yeah.
And
this just enables me to do that.
Yeah. And like this podcast, I love talking to people. So it's not something that I'm building to build a business out of initially, but I think it's probably a process that will happen as a result of enjoying what you do. And that's always the goal. Well, James, thank you so much for your time today. It's been awesome to catch up and hear what's going on. And perhaps 6 months or so from now, we should reconvene and find out what those tea leaves are telling you. But thank you so much for your time today, and best of luck building your new business.
Thank you, mate. Appreciate it. And likewise to you.
Thank you.